Now to the continued fallout from the worst federal budget in recent history. In comments today from former Liberal Treasurer Peter Costello, who's warned the Albanese government is imposing some of the highest taxes on investment in the developed world. Here to discuss this and a whole lot more, former Prime Minister Tony Abbott. Well, Peter Costello, that piece today in the Australian Financial Review, he focused on a range of things, but I guess that economic damage and that breach of trust now, he argues that modern Labor has in terms of not just the economy and the budget, but that covenant it has with Australians that if you work hard in this country, you used to be able to get ahead.
Peter, this government just doesn't get it when it comes to economics because, let's face it, none of them have ever had a real job. And on the question of trust, they had no excuse for this broken promise. There was no change of circumstance. There was no factors beyond their control. It was simply a lie. And I tell you this, they are going to go into the next election telling us that there will be no death duties. They're going to go into the next election saying that there will be no taxes on the family home. No one can ever believe them again.
You're putting back on the political armour, if I can call it that. I was going to say you're running to be the federal president, but nominations closed on Friday. You will be elected unopposed this weekend at the Liberal Party Federal Council in Melbourne. I've got to ask you, why would you do it?
Well, no one should do these jobs for the money because there is none, or
it's volunteer.
For the power because there's not much. Essentially, you only do these jobs because you want to help the party and ultimately to help the country. And I want to help Angus Taylor to become the 32nd Prime Minister because, by God, we need a change of government in this country.
Labor promised it. Loudly. Repeatedly. And now they have done the exact opposite. Welcome to Federal Analysis, where today we are unpacking the capital gains tax reversal that has the entire political commentariat reaching for their scorecards. So here is the quick version. Back in 2021, Labor's shadow cabinet formally confirmed the party would maintain the existing regimes for negative gearing and capital gains tax. Then Shadow Treasurer Jim Chalmers told Brisbane Radio that Labor wouldn't be going down that path. And during the 2022 election campaign, Chalmers told ABC's Insiders point blank, "We are not proposing any tax reforms beyond the proposals that we will shortly make about multinational tax reform." One tax reform. Multinationals. That was the promise. Fast forward to the 2026 budget. The government has now announced it will limit negative gearing to new builds from the 1st of July 2027, and reform the capital gains tax discount so that investors only pay tax on their real capital gain, applying to gains arising after the 1st of July 2027. That is a significant structural change to exactly the two tax settings Labor explicitly said it would not touch. Now let's be fair about what the government is actually arguing here. Albanese has pushed ahead with these changes and wants the core elements through Parliament by early July, framing the reforms around intergenerational fairness in the housing market. The policy logic is that the existing CGT discount and broad negative gearing rules have contributed to housing affordability pressures, a genuine and documented challenge for millions of Australians. The government's case is that circumstances changed, the housing crisis deepened, and governing sometimes means updating your position when the evidence evolves. That argument exists. And it deserves to be stated. But it has not exactly landed smoothly. The Albanese government is now fighting to sell the 2026 budget amid growing political backlash around the reforms, and has been moving to fast-track legislation before the parliamentary winter break to contain the fallout. When you are rushing legislation through to limit scrutiny time, it is a reasonable signal that the political environment around a policy is not comfortable. Former Prime Minister Tony Abbott has weighed in, characterising the CGT shift as a broken promise and questioning the government's credibility on pre-election commitments. His argument is that unlike some policy reversals where external events can be cited as justification, this one involves settings the government itself explicitly ruled out, in plain language, on multiple occasions. CPA Australia has also urged caution, warning that isolated CGT changes could unsettle investment decisions, the housing market, and business confidence, and that tax changes need to go hand in hand with practical measures to lift housing supply. So where does that leave us? The government says this is necessary reform. Critics say a promise is a promise. Independent experts say the policy design matters as much as the policy direction. And the Parliament is about to find out exactly where the numbers sit. That is your federal analysis for today. If you want sharp, no-spin breakdowns of what is actually happening in Canberra, subscribe to the channel and drop a comment below. Do you think the CGT change is good policy, broken promise, or both? We will see you in the next one.